World Wrestling Entertainment and Endeavor Inc., a massive merger. The WWE and UFC will combine to form a new publicly listed company with a value of over $21 billion. Joining us now to discuss is Brandon Ross, LightShed Partners media and technology analyst. I mean, this is a massive one here, 21 billion here. I wanted to get your take on the valuations for both of these companies.
Sure. Well, I think the market is telling you it's worth a little bit less than 21 billion at the current moment. That was the headline number. But really, those numbers were kind of drawn out of thin air because the bankers in the deal were making an assumption on what multiple the market would value this combined entity at. And right now, the market's telling you it's a little lower than what they hadn't anticipated. That doesn't take anything away from the deal itself. That's where the stock's trading now.
And what do you think of this synergy between the two? Some people say, look, this is a fit that's perfect for these two brands.
Sure. I think that in today's current media world, scale is always something that's helpful. I think right now you have executives in Ari Emanuel and Nick Khan who are both expert at negotiating media rights deals. And ultimately, the value of this entity is going to come down to how much they can extract in media rights for WWE's headline programming, which is Raw and SmackDown, and which are currently up for renewal. And when UFC goes to renegotiate their pay-per-view deal in a couple of years, where those numbers come out.
So for advertisers watching this then, I mean, obviously a lot of people pulling back on ad spend. Is this something you think they'd actually be excited about?
Well, I think in terms of the value that accretes to these companies, sponsorship is a big opportunity. And the ability to package sponsorship that moves across both WWE and UFC is probably an opportunity, especially because they're live events and advertisers know that only live events are truly reliable these days in terms of building an audience. I think it's going to be attractive to them. But really, it's the licensing deals for media distributors that are going to determine how successful this company is.
And as we look at the organization structure, Ari Emanuel, their Endeavor CEO, will be the combined company CEO, but then Vince McMahon as executive chairman. You mentioned obviously WWE's Nick Khan as well, alongside Dana White there over the UFC. Talk about that organizational structure and what that might mean for innovation and what happens next with this merger.
Sure. I mean, the hardest thing to ignore is that Vince is going to continue to have a role in what happens with this business. I think probably one of the main reasons he chose this partner is because he's been doing this for his entire life, almost 78 years, and couldn't imagine himself not being involved. So as long as they give on the creative side, Paul Levesque, Triple H, the ability to continue to be the ultimate driver of creativity, I think this will work out well, but Vince is going to have to let go of the reins just a little bit. And you saw Paul's work really pay off this weekend in a very successful WWE. As far as having Ari and Nick involved, again, you have two of the best agents in the media business that you've had, almost ever. And so that's going to be a powerful combination.
And what do you think is going to get investors a little bit more enthused at the moment? As you mentioned, those valuations, they're a lot higher than the street was expecting.
Yeah, I think in terms of WWE stock, I think the street was hoping for a situation where there was a crystallized value of WWE shares and they didn't have to worry or think about what these big renewals that drive all their EBITDA were going to look like. Now, investors have to sit back, re-examine how much value they think these deals are going to drive, and not just their own, but also UFC's deals. And so it's kind of a put up or shut up for WWE. They're still going to have to perform to drive value for their shareholders. It's not at this point an absolute slam dunk as it would have been on a cash takeout.
And just very quickly, any idea of what we might see in terms of layoffs with this merger?
The company already announced that there would be about between $50 and $100 million in cost savings. As you know, there's no cost savings without a little collateral damage in terms of employees. So you should expect there to be some significant layoffs.
All right, we'll be keeping an eye on that. We do appreciate you joining us this morning. LightShed Partners, Brandon Ross, thank you for your time.